JB here. Hope everybody's doing outstanding. September 21st, 2023. Just going to talk for about 5-10 minutes here around the Fed yesterday, the markets, some individual names, WW, ULTA, LULU, and go from there. But first, the Fed yesterday. So the statement came out, they didn't raise rates, but there were some little prints in there on the statement, and then followed up by Powell, who kind of set the stage for rates to remain high for a longer period of time. So expectations were maybe some cuts the first half of the year, um, but then the Fed came out and kind of raised their expectations into next year and further out that the rates are going to remain higher for longer. Um, and then he was trying to answer questions on the press conference, and it just seemed like he struggled to kind of ease concerns. And one of the big things you've heard over the last couple months, if you've been watching uh, financial networks or if you've been reading the headlines or some of these folks who've been talking about this soft landing, that the Fed is going to be able to take this huge situation with inflation, raise rates, not cause a recession, and we're going to have a soft landing. And it seemed like he kind of took that off the table. So they've already talked about, and he said it too yesterday, about have to take care of reduce the job openings. We have to induce unemployment. Just hate to see the market rally on bad news, or the Fed saying, "Hey, we want to induce almost want to induce a recession and pain on the U.S. consumer for inflation to come down." But that's kind of the picture he's painting. So maybe some short term weakness. I put it on the watch list this morning. I put it in the chat room yesterday. Just the spin that he put just was not didn't sound. It's tough to find reasons to think that the market's going to head higher over the short term. So that's just my thought process. Do I think that we're going to have a huge crash? We're going to break under 400 on a SPY, or another 10% correction is coming? I don't think so. Maybe 3, 4, 5% over the next couple of weeks. At the start of the week too, I think it was Ryan Dietrich posted about the seasonality of this time frame. I think it's September 20th through October 1st is the worst performing time frame over the entire year historically since 1950. Not saying that means automatically that it's we're going to sell off, but that just adds more kerosene to the fire, whatever you want to call it. And then now you have the government shutdown. That's going to be the big headline. October 1st is when they have to come to some agreement. Congress has to figure out this budget situation. They don't. We could have a possible government shutdown. It seems like every 6 months or a year there's headlines around the government shutdown. A nice piece in Barron's this morning around the government shutdowns. I think there's been 10 or maybe there's 20 of them since 19 whatever it was, and 10 of the times the market's been up, 10 of it's been down, and then the average change is zero. So, so it's not really skewed bull or bear in regards to a government shut. It's not bearish for markets, not bullish. If you look at the trends, it's a coin flip. So that's going to be another headline. A couple of questions on that to Powell. Does the government shutdown, is that going to impact your policy? And he's like, oh, we don't talk about the government shutdown. We don't factor that in, whatever. So interesting stuff nonetheless, but it just did not leave a good feeling for me when I started listening to his presser. And a lot of times you listen to it and he does a nice spin and he's able to kind of ease concerns. It just didn't feel like it this time. But we'll have to see. Not only that, IWM was under 200-day moving average. SPY broke under 440. So those are some kind of key areas that I was looking at that I thought maybe SPY is going to get down to low 430s. IWM maybe low 170s in the coming days. I'll kind of change course, but the fact that I'm in some calls, especially some I had last week and some of the weeklies this week, have to find a way to kind of offset those losses. So went and got those IWM puts. I closed the weeklies this morning just because I didn't want to be a situation where we get some kind of bounce. And small caps move a lot faster than the Qs and the SPY. So if it does bounce, IWM could be 180 in a blink of an eye. Those profits will be gone, so I didn't want to lose those profits. And then I went and added those 175s into next week, which I already took some profits on. I'm trying to see, did I take, what have I got here? I was going to take some profits on them. Nope. Oh yeah, sorry. I'm like, what am I talking about here? Sorry. All right, so I'll just hold the rest of those into next week, possibly, depending on what the market does here. At some point, we'll bounce a little bit. Looks like we're starting to bounce already. SPY was down to 434. Now we're up to 435. But I think that if there's a bias, it's to the downside. So I hate to say I don't have my bear suit on. I think it's going to be limited potential to the upside over the next couple days. Not only that, we're kind of we're at the end of earnings season, so the new earnings season doesn't pick up till the second week of October. All the data's been out, so we don't have any real true catalyst to speak of. So all the headlines are going to be about what the Fed's doing, about this, higher for longer, and then the government shutdown. So just that backdrop's just not good. I don't think short term for stocks. So that's kind of the thought process there. So I also, unfortunately, LULU came out. Needham came out with a buy rating yesterday. I don't know where they've been. So the stock rallied. It was up over 3% into almost hit 398 in the afternoon, and then the Fed statement, and then Powell came out, and then it sold off all the way down to I think it was 391. And here it is down here at 386, 387. 383 is the 50-day, is it the 200 or the 50? I think it's the 50. Let's see here. So 50-day moving average is 383.11. So big spot. It was a big spot on Tuesday. It broke down to 378 and then bounced from there. Gets down to 383 again. If you could break through that, I think low 370s come tomorrow. Crazy as it sounds. We'll have to see how that plays out. Also, you had another analyst this morning, Telsey Advisory Group, came out with their reiterated outperformer rating, $450 price target on Lululemon. There's no doubt the company has had posted great growth, great quarters. The past quarter was a monster beat and raise, but the market's forward looking. So I think, eventually maybe Lulu's back $450, $500, but I just think short term there's still more opportunity to play for downside. Similar reason why I went and got those ULTA puts finally. Got some time, October 6 strikes. I think similar story, the consumer. I think they've been posting great results, but the market's going to start pricing at least a little bit of more slowdown, especially in the higher end discretionary stuff. You can't buy the $30 lipstick. You're going to buy the $10 lipstick. Things like that. Some trade offs. What they used to call it the trade down. Back during the Great Recession, Dollar Tree, Dollar General were doing great because people were trading down from the expensive stuff down to inexpensive stuff. Not saying that's the environment. We're not in the 2008 environment. But I think higher for longer means that people who have accumulated debt on their credit cards, those rates can go up, right? So if you have debt and your interest rate is 14 or whatever, it's 12, 17, they have 45-day notice, they can send you a letter saying we're raising your rate, and some of the people have probably already seen that. Depends on what's in your agreement, your credit card agreement. But people who have debt, your monthly payment's going to go up just by a function of that. And then, if you're not paying as much or you're paying the same amount off each month, but your rates are going higher, the debt's going to keep going up. So that's just not a situation that bodes well. Student loan debt, obviously those payments, which everybody's been talking about for the last 5 months, those are coming back online. So is that factored in? You have to think some of it's priced. It's not a surprise, it's not coming out of nowhere. But I think there's a lot of different, somewhat headwinds in that I think are going to be a problem for the next couple months. So at least the next couple weeks, maybe into earnings season, shake it out, and then we can see where we go from there. So that's kind of the thought process on some of those names. Weight Watchers, after the close, I did not realize the Oprah was going to talk about, and the discussion she had with the CEO of Weight Watchers was on her Oprah network. I didn't realize you had to subscribe to that. So ironically enough, you go there at 4:15 and you go to click the link, and now it's blacked out. The page is blacked out where earlier in the day it wasn't blacked out. So it's almost like they knew people were coming to wait to see this discussion, and then they're trying to capture these people to subscribe just to hear it. But there were some folks who did watch and gave some kind of reviews, just pretty much just Oprah trying to take away the stigma of weight loss and taking these GLP-1 drugs, which there's a stigma associated with it a little bit when people look at someone who was overweight and obese and now they're not and say, oh, wow, how'd you lose weight? And they say, oh, I took Ozempic or Wegovy or whatever, Mounjaro. And there's a stigma, and they want to remove that stigma. And the other part, they're trying to say that that obesity could be psychological and mental, it's not a choice, right? Hey, I'm not going to sit here and debate. I still like Weight Watchers down here at 10, 12, now it's down almost 12%. But the things these small caps are selling off, so people who are in some of these names are just going to take profits regardless of the name. So hopefully that finds some support. I was hoping $11, but here it was 12.38 yesterday at about 10.30, and now it's down nearly $2.28 in less than 24 hours. On no news, right? No, there's no catalyst. There's no nothing. It's just a volatile name, very divisive. That's the other part of it. That, wait. Well, I should call it WW International. They have I think it's $1.4 billion in debt, which they've pushed all the way out. I think it's to 2029. But people look at that, and then as rates continue to go higher, these companies that have a large portion of debt, you get concerned. When it was an easy rate environment, people were able to have access to cash at very low rates. And now if they haven't paid that off, they're going to have to kick the can, and kicking the can down the road, refinancing that debt, it's going to be much more expensive than it was just, three years ago. So anyway, that's kind of my rant for now. I'll try and get on later. I just, I hate to be like negative because I'm an optimist, right? I try to look at everything with the glass half full lens as opposed to a glass half empty. But to me, it's very hard to wrap my head around getting really bullish here with all the different possible scenarios playing out. So that's, I'm just more apt to add inputs. I'm not putting on my, my fear mongering, hide the wife and kids, get into the bomb shelter kind of situation. I just think there's an opportunity to play a little bit more to the downside than upside, 3 or 5% maybe, and then reevaluate from there. That's it, folks. Hope everybody's having a great day. I'll try and get on later. This is recorded. I'll have it up on the blog later. Rock and roll.